Hello everyone, and welcome to the Quantpedia Explains Trading Strategies video series. Today, we will speak about pre-election drift, trading strategy for 2022 and 2024 US elections.
Hello everyone, my name is Radovan Vojtko and I'm CEO of Quantpedia. So today is the 7th of October, and as we are nearing the November, there is one important event in the United States or that has an impact on stock market. The event that I'm talking about are elections in the United States. In the US, there are two important elections. The first one is, of course, the presidential election, which is every 4 years, but there are also elections for the United States Congress, which are held every second even year. We do not need to distinguish between two elections. We can analyze them as one event, because at the moment in this video we are not interested into politics. So it means who is the winner of the election, which party wins, whether they're the Democrats or Republicans, and who have the strongest hand in the Congress or in the White House. There are some differences between both parties, and they can have an impact on prices, but what we are more interested in this video is individual event election and what are the drifts that the elections are causing. This type of the strategy, so pre-election drift or drift before the election, is a seasonality strategy. There are a lot of seasonal strategies on media and of course in academic research. The seasonal anomalies are quite popular in academic research. What we will discuss is a pre-election drift strategy. So pre-election drift strategy says that there is a significant drift in the stock market in a few days before the election. If I'm telling about the elections, I'm talking about the elections to United States Congress or presidential elections. The simple trading strategy consists of buying the S&P 500 in whichever form, in ETFs, CFD, by fund or whatever, at the market close before the 5th day before the US election, and hold it until the close of election day. The Congress defined the occurrence of the election day as a Tuesday next after the first Monday in the month of November. So this implies that the election day usually is between the November 2nd and the November 8th of every even year. So 2020, 2022, 2024, etc., etc. What does it mean is that the strategy trades not very frequently. We have like one trade every 2 years, but nevertheless the performance is still interesting. This is the performance of the strategy since 2000, but we have a more interesting paper or blog on Quantpedia, which is called Pre-Election Drift in the Stock Market, which analyzes elections over the last, 70 years, since 1950s. What does the analysis tell us? We analyzed pre and post election day S&P 500 performance from 1950s until 2018. As we can see, there is significant positive drift in the prices that starts 5 days before the elections. There is significant drift on the election day, and after the election, performance of the S&P 500 is again the random. What does it mean for us? We can even buy S&P 500 only for the election day. Of course, we will have some performance, but it's even better to buy S&P 500 5 days before the elections and hold them until the election day and sell the position at the end of the election day. What is the performance? So we have like average edge of 2.46% per election, nearly 2.5% performance every 2 years. What does it mean for us? Yeah, of course, it's not strategies can be used as just one strategy for a whole portfolio, but it's a very nice addition and this very nice tactical asset allocation strategy, which tell us when we can overweight our equities for a few days in a year to get some boost in the performance of our portfolio. We can even use the leverage if you want. The maximal decline during those years was only 2.47%, so and the average return on one election was 2.46%. So it means we have like very nice risk to return ratio or risk to return to drawdown ratio. As I mentioned, here is the performance of the strategy over the last 20 years. As you can see, the highest performance was in years 2008, 2006, in year 2000 and 2014. The last elections in 2020 were not very positive, but the next elections in 2022, that will be in around a month, I hope for a positive surprise. Thank you very much for your attention, and I hope that you like this very simple but very interesting trading strategy.
Interested? Then pick another video to learn more, or subscribe to Quantpedia Pro and try how our analytics and reporting significantly save time spent on quantitative research.